results. Do I
Ritu,
hope
I'm
that the
afraid got a management waiting by, but good chatting with you as always. I'm afraid we couldn't really complete the conversation, just so many earnings coming by. Vijay Thadani, the VC and MD at NIIT, joins us in the show right now to talk about the quarter gone by. Mr. Thadani, always pleasure speaking with you. Tell us firstly why this PAT shrinkage that you've seen this quarter.
Yeah, I think that is because of the reduction in profits of the associate company, which is NIIT Technologies Limited. But on the operational performance of NIIT Limited, which is where the results should be focused on, I think we've had a very good quarter. We had a double-digit growth, which is after many, many quarters, I think 16 quarters, 12% growth in revenue, and now we are at 9% EBITDA. And this has been steadily increasing. So I think it's an accelerating operating performance. The PAT issue, of course, is because of the lower profits from the associate company, which get consolidated into ours as below-the-line items.
Now, let's talk about what were some of the key deal wins in the corporate learning group and what is in the pipeline.
Yeah. So I will definitely talk to you about the corporate learning group, which has had a very good rock-steady quarter, 19% growth in revenues and 12% margin. So I think better than expected revenue growth and absolutely steady margin was one of the positives. There were three important deals, two contract wins which were in existing accounts, existing expansion of contracts, and one was an extension of again, an existing customer's contract. So very, very good. And our revenue visibility has now gone up to $208 million on that basis. We have a fairly robust funnel because people are understanding that training is a specialized subject, and for performance to come out of training, it requires to be in specialist hands. And NIIT is one of amongst the few organizations who specialize in this area and in the level of detail and reach and depth that we have.
Indeed. Mr. Thadani, though, just getting back, the point that you were making, that the PAT shrinkage has been on account of the subsidiary NIIT Tech's performance, and thereof you're seeing, such a huge jump from what you reported in the same quarter last year. So would you say this is an aberration, this is only a function of this quarter, and by next quarter onwards, you will be able to post a beat?
Yeah, actually, if you look at NIIT's performance, at an operating profit level, we have had a 36% growth. So a 9% EBITDA margin, which resulted in 36% growth, which means more profits and more cash. The aberration that you have seen in the associates' profits, that even in their results they had mentioned is a one-time exceptional adjustment which they have had to make, and that obviously will correct itself in the future quarters. So operating performance of NIIT Limited has been extremely robust. In fact, the best that we have had in 16 quarters, and that is the right number to be looked at.
Reiterate your 15% growth rate for CLG, and what's the segmental margin improvement that you're targeting?
Yeah, so we had targeted 15% growth rate for CLG in this year. We are at 19% at the end of first quarter, so we are ahead of those numbers. Margins were at 12%. Similarly, in the skills and careers group, which is where you have seen the actual benefit of the turnaround and the transformation journey, which has shown a very substantial acceleration to reach the numbers at which it has reached, both in terms of revenue as well as in profit. Given the fact that quarter two is a big number, is a big quarter for skills and careers group, we do see the benefit of that quarter coming into this journey. Our digital DigiNext programs, the digital technologies transformation programs, have actually been accepted extremely well, and we are seeing very, very good response in that. So we seem very confident of meeting the numbers that we had predicted at the beginning of the year.
So tell me, what's the headroom then, Mr. Thadani, on the blended EBITDA margins, and what levels are you working towards?
So I think in each business we had defined an agenda for the EBITDA margins. As I mentioned, in the corporate learning group at 12%, in the skills and careers group mid single digit, because that business was in a loss till last year, and I think for it to have turned around and start making profits, we'll get the benefit of operating leverage. And then again mid single digit in our schools learning business. So the totality of that should give us a fairly robust growth in operating profit over last year.
Does it then target or entail in terms of a top line and bottom line growth that you may be targeting for FY17? Any guidance numbers?
I mentioned to you the guidance that we give is in each of the three businesses, so that people get a granular understanding of our businesses rather than an overall. And I think each of the three businesses have their own vectors, and we talk about these three vectors I just mentioned to you: corporate 15 and 12, skills and careers high single digit and mid single digit EBITDA, and school learning group mid single digit EBITDA. So that is the totality, and we have a fairly robust order book. I mentioned to you about $208 million of visibility in the corporate learning group, in the skills and careers, the digital curriculum, and the schools learning group, the IP-based license revenues that we are beginning to get. 139 schools added last quarter. I think these are all positives which will give us the necessary impetus to achieve the numbers that I talked about.
Indeed. Thanks so much, Mr. Thadani, for speaking with us, and good to get in such details in terms of how the individual segments are going to actually perform. And NIIT management extremely confident sounding, Mr. Thadani, there in terms of what growth projections they're going to see in all of their verticals going forward. NIIT, though, just about trying to find its feet, now nudging the green line as we speak. 84 is where the stock is right now. Quick break. Then